Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $118.8 mark, and here on TradingView the market is down by 5.49%, and this is after seeing a green day yesterday. And in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot structures, the Fibonacci's, the key areas of support and resistances, and also draw out any key chart patterns that you have information on this chart. And I'll kickstart the video by giving a brief of what has been happening. Quant from the all-time high has been seeing lower prices in this massive ABC corrective movement, which has now taken us back to around the $41.2 mark, and after making that low we saw a very nice bounce to the upper side in a movement that has been obeying the Elliott wave structures. And if I jump to the forward chart so that you can see those Elliott wave structures, you can see I have this Elliott wave structure over here in blue, which I believe we have seen the formation of a higher Elliott wave count 1, and this Elliott wave structure over here is a fractal wave within a higher Elliott wave count 1 to the upper side. And having seen the formation of a higher Elliott wave count 1, whatever we expect next is the formation of a higher Elliott wave count 2, which is a corrective movement. And initially here on the charts, for those that might have watched my previous videos, I did not have this Elliott wave structure to the upper side like this. I had a different wave count to the upper side, having this as the first wave to the upper side, then a wave 2, then a wave 3, then a wave 4, and then a wave 5. And the reason as to why I've removed that Elliott wave structure that I had previously here on the charts is because our wave 4 over here retraced into the high of the first wave over here, and having done so, I had to remove this Elliott wave structure from my charts and view this movement to the upper side as something else. And the only way to view it as is as having this fractal wave to the upper side like that. Then whatever we are seeing on this other side is a corrective movement in a higher Elliott wave count 2, and using the Fibonacci's we can get a minimum target area to the lower side, that is the minimum retracement area to the lower side in the formation of a higher Elliott wave count 2, connecting the Fibonacci's from the low of that first wave to the high of that first wave, and that gives me a minimum retracement area between the fib level 0.5 and the fib level 0.618, and that lies between the $134.8 mark and the $112.4 mark. So that is the minimum retracement area in the formation of that higher Elliott wave count 2. And zooming out on this chart so that you can see this better, you can see we have retraced into that target area, making our low at around the $106 mark. And after seeing that low, we have come back into this target area once more, that is had a bit of a bounce back into the target area. And from what you can see here on the forward charts, you can also see that we are trading below the 20-day MA, which means it's acting as resistance. And you can see over here we have this long wick over here, and within that long wick you can see the 20-day MA gave us resistance and we got rejected, and then so this pulled back to the lower side. Jumping to the forward chart so that we can see what chart patterns we have information on this chart. Here on the 1 hour chart, within the formation of that higher Elliott wave count 2, we had been trading within this channel, and at some point we managed to break out of the channel to the lower side. And after breaking out of the channel, we got into our target area in the minimum retracement area in the formation of that higher Elliott wave count 2. And from what you can see here on the 1 hour chart, we are also trading below the 20-day MA, meaning it's also acting as resistance. And within this movement right here, we have a formation of another chart pattern. And if I draw it out, that chart pattern is a double bottom, and we can have this impulsive movement making the first bottom, then so a very nice bounce to the upper side, seeing the formation of the neckline, then so the formation of the second bottom, then we try to have a breakout to the upper side. But it seems like the breakout will not be in, and this is a chart pattern that normally breaks to the upper side, having the target area of the breakout as the height between the neckline and the bottom. So using a trend line, we can get that height and then place it above the neckline to give us a minimum target area to the upper side, back to around the $149 mark, which perfectly coincides with a key area of resistance up there. So there is a possibility, in case we see a breakout in what might be a bit of a consolidation over here. In case we see that breakout to the upper side, there is a possibility that Quant will get back to around the $149 mark, and in case we manage to break above that key area of resistance, I would expect to see a retest of that key area of resistance before we continue pushing higher to our next key significant key area of resistance at around the $154 mark. So that is the first possible scenario that can play out over here. The other possible move that we can expect here on the quantum chart is that we are not going to see that breakout out of this double bottom any soon, and from the structures that we have over here on these candlesticks, there is a possibility that we might continue pushing lower and get back to around the $106 mark. And in case that plays out, then that will be completing the formation of a triple bottom, because we'd have this structure now like this, having that as the third bottom, meaning we have a triple bottom now. And this is a chart pattern that also breaks to the upper side, and the target area of the breakout still remains. So in case it plays out that way and we get a triple bottom over here, I would expect to see also a bounce to the upper side back to around the $149 mark. So there are two possibilities over here. The first one is that we can see a breakout to the upper side, get back to around the $149 mark, and the other one is that we can first get back to around the $106 mark, make a triple bottom before we see that breakout to the upper side. So let's be patient and see how that plays out, and continue watching those key areas of resistances and those key areas of support, and I'll keep you updated on any movements that plays out over here. Also taking a look at the 4-hour indicators to see what movements will be supported on the 4-hour RSI. On the 4-hour RSI, we are trading at around the 38 mark, meaning we have massive room for us to support any movements to the upper side in case we see any breakouts to the upper side. Also, any movements to the lower side still be supported on the RSI before we get into the oversold region. Also taking a look at the MACD. Here on the 4-hour MACD, you can see we are losing the selling momentum, and there's a possibility that soon we are going to print a bullish cross here on the MACD. So let's be patient and see how that plays out, because that will be supporting higher prices on the charts. And that's the update for Quant.